What's up guys, before we get into this video I just want to say we're doing a 30% discount off my course running up until Monday. If you are interested, head over to my Twitter and we'll get you started as soon as possible. My Twitter is Louis_crypto, and yeah, there's a link to it down under below this video. Please like, please subscribe, comment, turn the notification bell on for here and over on Twitter as well. What's up YouTube, it's Louis here, I hope you're all well. Finally doing another quant update. If you're following me over my Twitter, if not, make sure you're following me. But if you are, you should be aware that last night I made a post about Quant, about this crazy reversal that we've seen as we touched the 20 EMA. And I was basically saying, if we close above $160, this is extremely bullish. And we closed at around 160.87 cents. And that's because we closed above, and it was important basically because we closed above this specific high. $150 was a psychological level, but we're not just focused solely on psychological levels. We just need to know that this is a key area of interest. This should have big reactions as we've seen in the past, from 150 all the way until 400 and whatever it is. This big 100% pump over here, big dumps from it. And now it seemed like there was no reaction. At the moment, it hasn't done anything really. We've burst completely through it. But let's not get too ahead of ourselves. The last thing I said was, if we're taking a look at the weekly time frame, we can see that we're about to form the bullish cross with the 20 and the 55 EMA. So what we want to see is, once this is formed, we need to fall back to it. Now, we need the 20 to drag over. So for that to happen, you need to see the candles continuously going up. So that suggests that for some weeks, maybe even a month or even longer, I don't know guys, but at least I know it's for some weeks. It's not going to be 1 week. For some weeks, we should continue to see Quant going up. This should not be unexpected now that we know it's about to form a bullish cross, which means uptrend, and we've closed above the body candle closes of this. And now we just need to take this out with the weekly candle close. So that's why on the weekly time frame, we want to see a close above 160. But the fact we're seeing it on the daily already means for the next days we should be going up unless we close back under it. So if we see a close back under 160, this is when we're going to start heading back down to 150. This is a key area of support now that we've been closing above it. Although it should have acted as a big resistance, it looks like it was an area of resistance from down here. So I've always had this box, but yeah, it was 130 where we reacted from. I know a lot of you did sell over here and maybe bought in and around when we were holding support here. But yeah, we were all expecting this to be such key resistance. This is the best example of why it's probably just best to hold and add. This is what I personally do. I don't trade with my whole account. If there's people like that out there, that's just some advice of mine that I teach to my students. But now that we've closed above this, we should see, as I said, expected continuation on the weekly time frame. It's just day to day. We just, after this big bullish hammer, you just need to expect a bullish continuation, basically. But knowing that if we close back under 160, we're going to go back to 150, which is a key psychological level. We need to stay above this zone, basically. That's why, even though we went under 150 during the day, there was some sort of support here. If you didn't have the 20 EMA, you wouldn't know exactly why. You could say there is some resistance here. So you flip this resistance here into support. The 20 EMA was also lining up there. You could say this was some sort of ascending triangle, double bottom, and you broke out and you're back testing its support for continuation. So I could get some fibs for a technical target to the upside to see where exactly Quant is headed to. From this high to this low over here. We've already hit the 1618, so that is exactly why we're seeing some sort of rejection. And the other two levels that we've drawn out are key levels that the fibs are telling us to watch out for. So that's why we know if we're closing below the 1414, we're going back to the 1.272. And if we close below the 1.272, we still have this 20 EMA here. However, if we're losing this, this is where we're going to head back down to this high, where the 55 EMA, by the time you've come down, the 55 EMA will be around this 1 fib level, around $130. So it's this zone of 130, the bottom of this red box over here, until 150, which we need to hold above. So now, acting as confluence is the Fibonacci. We didn't need the fibs for this because we've already had these levels drawn out. and we've had our multiple reasons for why. And now that we've turned on the Fibonacci's, we see that's lining up with our technical analysis. So it's great to see that the Fibonacci's are basically backing up my viewpoints, or the data-driven viewpoints. So yeah, going forward, as long as we're now remaining, I'm going to make this orange box a little bit bigger. I hope you guys are enjoying today's video so far. I'm just trying to keep it as like, yeah, with loads of value, you know what I mean. But yeah, as long as we're above $100 over here, and of course, basically, we don't want to lose 130, but as long as we are actually above $100, we should see continuation, obviously, to these two technical targets. And you can see that they're sort of running into this previous old head and shoulders pattern that we call to the downside. It's interesting because we said when we were losing this, in the future, all the way back to January, December, we were saying once we do lose this, or if we do lose this, and we go down to 70, and no one wanted to believe it, but we were basically saying on the channel back then that this line is going to be important in the future, and we're using these fibs right now. And it does seem like technical analysis works if there's any doubters out there. One clear factor is yesterday with the CPI data, we should have gone down. We did go down, but Bitcoin and crypto is like, we don't actually give a shit about what the CPI data is going to do. It completely reversed. Let's see if that continues. We don't know if it's going to continue, but for now it's been like FU to the CPI data. So we need to hold above this bear market level. Right now I'm going to actually flip it into green because it is now support. I'm going to flip this if I can't do it right now. It doesn't matter, I'll sort that out later. But yeah, this green box is now support in around 130 to 150. You don't want to lose this, but even if you do lose this, as long as you hold above, let's say $100, $100 to $110, then we should actually continue and try and at least break back above this. You might fail and we do go down, but again, as long as you're above 100, which we are, and we're above the bear market level, so it's now bullish, the bull market level, then we should continue to these two targets, which would be along the way to the inverse head and shoulder target back at the previous all-time high. Okay, going back to the weekly now, at some point we need to come back to hold this bullish cross. It hasn't just formed yet. It might even form at this weekly close. Let's have a look on Monday. So I hope to see you guys back here on Monday. I probably will not be doing videos over the weekend, but I hope you guys found value in today's update. There's a 30% discount on my course. Make sure to check that out. That's until Monday, so there's only a couple days left until this offer is no longer, because there was a few people that wanted to, were saying that they couldn't afford it. And so I'm doing this offer for you guys. If there's some slots for the mentorship open, and yeah, just message me over on my Twitter, Lou_crypto. Make sure to follow me over there. Turn the notification bells on over there as I post some updates during the day. Thank you guys. I'll catch you in the next one. Like, subscribe, and comment, and peace.